The following is a presentation of TFNN.
'Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the June 16th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a fantastic weekend and, of course, a fabulous Father's Day. I know I did, and I want you to know that I'm grateful for your presence here right now. We begin our trading day together by making sure that each of us knows our daily outcomes, because without knowing our outcome, we'll become dabblers or stressors, and the world that you and I live in, well, it's a world of mastery. So my outcome during the next 2 hours is to teach how to master the tools for trading, and that includes the tools of the mind, because when you and I, when we can master the tools of our mind, we begin to think like a strategist. And that's really important because most folks focus on tactics. But what you and I know is that to really master life, we've got to always think like a strategist. A strategist that in trading and investing uses tactical tools like the A to B equals CD pattern, swing points as anchors for information, Gartley and butterfly patterns to, for buying and selling, and most importantly, a strategy of combining the candlestick signals that the sign makers of the markets, the bulls and the bears, form for each of us on every time frame that we trade. And what you and I know is that using tactical tools, well, it's really important. But for us, the real key to trading and investing, the real key to get our money to work harder for us than we do for it, is to have a strategy. That's what I call mastering probability, because using tactics without strategy is a recipe for failure. And failure, folks, it's just simply not an option in our playbook. And we never confuse failure and losing money as the same thing, because it definitely is not. You see, in trading and investing, our spoilage is money, just as running a household means throwing out food that's gone bad in our refrigerator. And when it comes to trading and investing, we always use stops. And we always have an exit strategy that covers both sides of the trade, which means we use a bracketed OC order. You see, you and I are masters. And that separates us from the dabblers in life, the ones that quit as soon as they get frustrated. It most certainly separates us from the stressors in life, the ones that are able to push through obstacles but get things back, and they get things back on track, but then they get stressed when things don't go their way. Nope. You and I, we're masters, and as masters, we expect obstacles, and we expect losing trades. In fact, we expect a series of losing trades just as we do a series of winning trades. And because we have this expectation, loss of money is nothing more than spoilage resulting from a failed trade pattern, and that, folks, becomes part of our system expectancy, the ultimate performance tool when it comes to our decision-making. So today and every day, let's help everyone that we can to think like a strategist, because strategists will slay the tactician all day long. So let's go look at one of our tools to help us think like a strategist, the tool I call the Universal Quest. George Leonard, in his book Mastery, talks about enjoying the plateau. Now, this is really important, enjoying the plateau, because so often we find ourselves racing to get ahead, thinking so much about our next achievement that we don't appreciate the time in between. Here's the deal. If we don't stop to smell the roses, we can lose our motivation. And when we lose our motivation, we become unhappy. And happiness is what it's really all about. Without happiness, our potential gets blurred. And without potential, we'll take no action. And with no action, we get no results. And without results, good or bad, we do nothing for our belief system. And our belief system is the whole trick to the entire game of life. It's why I so often talk about becoming your own electrician, about rewiring our belief system. You see, happiness is not in the getting. Happiness is in the becoming. And happiness is the universal quest. Happiness is both the joy of discovering and the joy of knowing. Happiness is the result of awareness of the full range of life, and that means opening ourselves to experiences, to sounds, to harmonies, to dreams and goals. Yep, dreams and goals, folks. Never stop dreaming. Happiness is the joy. Happiness is the joy that comes from designing a life that practices that fine art of living well. Happiness is found in having options of doing what we want to do instead of doing what we have to do. And when I say options, I mean choices. If you're not happy today, write down at least 3 options, 3 choices that could make you happy. It's got to be 3. It must be 3. Because one choice is an ultimatum. Two choices creates a dilemma, A or B, right? 3 choices, that means we've got options. And if by chance you're not happy at this moment, the natural response is to say that nothing about my situations makes me happy. And coming up with one option is hard to do, let alone 3. For those of you, I say, I know, I understand. But my question to you is this. If you could come up with a choice or an option that would make you happy, what would it be? What could it be? Always remember that questions are the answer. Ask a better question, and you'll get a better answer. Don't be asking what's wrong with me or why I'm not loved. Instead, focus on what's right with you, and the folks, all that love will come through. It'll be your gift. The happiness that we're searching for in the future, folks, guess what? It must be found today. So take time to enjoy the plateau, because happiness is the universal quest. It is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures trading off about 28 points. They're trading at 16,668. S&P futures down 3.5. They're trading at 1924.75. NASDAQ futures off 6, trading at 37.63. Russell 2000 off about 3 points, trading out at 11.54. Goldilocks up $4 right now. It's trading at 12.78. It has been as high as 12.85, running into some real resistance. We'll see if it can clear that level. Silver futures trading out at 19.64. Light sweet crude flat right now. It's trading at 106.93. It's been up as high as 107.54. Our call-in number is 877-927-6648. Would love to hear from you. Happy to field your question, call, help you out with whatever stock chart it is that you might be looking at. If we take a quick peek around the globe out here, we'll see that the DAX and the FTSE are both off 20 points, down 0.25% to 0.33% out there. In Asia last night, the Nikkei was off 164 points, 1 full percentage point, virtually unchanged, off 18 points, not a big deal in the Hang Seng, and up 16, up 0.75% in the Shanghai. So where do we begin our day? Where do we begin our day? Let's go take a look at what's going on in the daily contracts for the futures. Let's start out there. Let's take a look at the NASDAQ futures out here. Let's go see what they're doing, because that's really been the strength in the market. And from here, we'll probably get a pretty decent idea as to whether or not we're going to see a market that's going to bounce. And a market that's going to bounce says that the NASDAQ during the day, today, because it's a daily chart we're looking at, holds a price level of 37.6230. 37.6230. That's what it needs to hold, or that's what it needs to hold if we're going to use our market profiles as a level of support. If it does hold, it says that price could move all the way up to the 37.9950 area. That's its level of resistance. That's that unfair high. Point of control is in essence where it's trading just slightly below that right now, 37.7160. It's where it's most comfortable from a price standpoint. So we want to be watching 37.6230. It closed below that today. That says that we start to see a deeper retracement in the markets. Now, the NASDAQ here has been the strong link. If we take a look at just normal retracements, we're going to use swing points. You say, what's a swing point? That's a great question. The swing points that we want to use, that we really want to use to do our measuring with, we want to use the swing points where you see a significant change in trend in the marketplace. Here, if you're watching this on Tiger TV, what you can see, and if you're listening on the radio or mobile device, let me describe to you what it is we're looking at. And I'm going to come all the way back. Well, let me put my cursor and crosshairs up there. I have to turn those off in order to be able to copy charts to include in the newsletter service and everything in the morning. So sometimes I forget to turn them back on. But, that's pretty weird. In any event, that's really weird. So now I'll just have to say it's May 13th. I don't know why my cursor's not there. I'll deal with that in a break. But right now we're looking at the May 13th standpoint out here. That's a swing point high. Price moves down into a low down here on the trading session of about April the 15th. It says April 11th, but man, oh man. April the 15th as the swing point out there. So we're going to try. Let me see if I can work this retracement ruler. This would be a bummer. I just may have to. It's not working right. Let's do this. So Stevie always has a backup. That's a good thing. You got to have a plan B. Now let's switch over to the. Let me switch over to this charting system here. Let me switch from eSignal over to Ensign, and we'll get this thing all situated here. There we go. All right. Swing point high out here that we're dealing with. Well, you had a little key reversal session that was on March the 6th out here inside the NASDAQ daily. So if you go from that swing point now down to low on April 15th, those are swing points where you see significant changes in trend in the marketplace. Now what we're going to say is we're going to take a look at the high that came in. Let's see, the high was on June 11th was out at 38.04. 38.06 was on June 12th. So we're going to go from the low. We're going to go from the low of April 15th up to the high out here that came in on June 12th. If, in fact, the NASDAQ is able to break through that market profile, what's likely going to happen is you'd see a price move back to about the 36.53 level. 36.53. Versus 37.63. 110 points. Now, at 110 points, it's going to feel like the sky is falling. People, the news is going to be horrible. Everything's going to be falling apart. It's going to feel like the world is crushing down when you take a look at the stock market. The reality is, that's only a 0.382 retracement. Again, and for those of you that are new to this concept, take a rubber band that's sitting somewhere near you. Somewhere, if you don't take a rubber band that's sitting near you. Visualize taking that rubber band, because you've all done this at one time or another, wrapping it around your index finger, wrapping it as hard as you possibly can without breaking it. So much so that the blood cuts off from your knuckle there, or wherever it is that you go ahead and wrap that around. And then what I want you to do is I want you to back that off only 0.382%. Approximately, right? They're just guidelines. It was Barbosa. That's the name that I was searching for the other day, and thanks to one of our Tigers for sending me the information on that. But if you only back it up 38%, and then you let that go, how much energy is there? A huge amount of energy. So backing off to the 38%, I don't know that it's going to do that. I'm just saying we're going to use as our guidelines here. We're going to use our market profile unfair low, which right now is not giving us a bearish signal. Most certainly is not. But it closed below that today? Well, it most certainly would. And then where would it back off to? Well, our first target would be just simply that first retracement level, the 0.382 retracement level, right around 36.53. It seems like a huge juggernaut down to that level there, 100 points, but really small. In fact, you could really see the NASDAQ trade down to 35.58, and there would be nothing wrong with it out there. So that's what we want to be paying attention to. If we take a quick peek here at the current contract, what we're going to see is the bulls are at work defending their position out here. We can see hammer number one. That took place right out here on the session of the crosshair. There we go. That took place at the 4 o'clock close. That was on June 12th. We see another hammer candle that came in at about 10 o'clock in the evening last night. 877-927-6648. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 23, S&P down about 2.5. So before we went to the breakout there, we were looking at this chart here, the 120-minute chart for the NASDAQ futures, and I was pointing out two hammer candles, the bulls out here, the sign makers, the bulls and the bears, the sign makers out here certainly painting signs as to the areas where they want to put up a fight. And that's at the low of the hammer candle that formed at the 4 p.m. close. That was on June the 12th out there. That low is out at a price level of 37.44. 475. Now, along the way here, we've seen that at that stage, well, really at about 2 o'clock in the afternoon, that was also back on the time frame of June the 12th out there. What we'll see is that price had moved down on the 120-minute time frame, by the way. It moved where? Into the extreme oversold condition. The black horizontal line going across my screen here down at the bottom, that's the 14-period relative strength indicator out there. That's the 30 threshold level. When price gets to near 30, below 30, that's when you see a market that is in a oversold condition. Likewise, when it's above 80, which we don't have here, that's not what we're looking at this stage here, it would be overbought. Now, the most bearish thing that a market can do, or the most bullish thing, most bearish is going to take place when a market is oversold and how it reacts when it gets down in that 30 level. The most bullish thing is going to be the opposite, when it's overbought, and how it works off that oversold condition when it gets above the 70, let's say 80, 70 level out there. Katie is extremely overbought out there. Well, in this case here, we saw that hammer candle form, so that was not unusual. You could see that the market's going to usually bounce. Now, it's not a trading tactic or it's not a strategy. It's a tactic out here, okay? So, in any event, let's just take a look at what it has done to work off that oversold condition. It's just simply really worked sideways out here, hasn't it? So as strong as the NASDAQ is, and even though it's formed these hammer candles, and that's important, it is important for price to hold those hammers. The first hammer, well, that's going to be the most recent one that formed here at 10 o'clock in the evening. That low is 37.50 and a quarter. But really, you've got to come all the way back here to the one that took place last week, and that's going to be the low of 37.44.75. A break of that will then go ahead and give the weight of evidence to that 0.382 retracement area that we looked at. But we do know this is a defensible position that the bulls are taking inside the NASDAQ, which is the strong link in the marketplace. If we take a look at the ES Mini, let's go see what it is doing on a same time frame. What we're not going to see down here is we're not going to see any kind of hammer candles. Just didn't present itself. So we really don't have much in the way of conviction inside the S&P 500 as it worked off its extremely oversold condition. We don't see those significant bullish candlesticks out here to let us know that the bulls really want to go ahead and defend that area. If we take a look at the Dow futures as well, let's take a look at that. We'll see if there's any real bullish signs inside the Dow futures. Give me a moment. Here we go. Dow futures. Now, the Dow futures did form. Okay, that's interesting. So Dow futures formed a hammer candle last night at 10 p.m. Therefore, that says that today it's very important for the Dow to, from a bullish standpoint and or bearish standpoint, the level to be watching is going to be 16,624. 16,624. A break below that level, and that will suggest lower prices. You might be asking the question, well, how low can it go? As if you were doing the what do you do that when you get underneath the pole out there? You know what I mean? Shoot, what is that? What is that dance? In any event, while you're trying to figure that out, let me go ahead and pull up the Dow futures. Let's go take a look at the retracement levels out here, and let's take the retracement. Let's come from the swing point low in the Dow. That's back on February the 4th. We'll take a look at two levels. Let's come from February 4th. The significant. Oh man, that's okay. Well, that's weird. Sorry about that. So these tools are not exactly working the way they're supposed to be. So I'm going to just simply go to Plan B again. Good thing Stevie's got a Plan B out here. Let's take a look at retracements off of. Let's take a look at them off of April. Let's do this. The two retracement lows. One, take a look at April the 14th, from that low to the high that was put in out here. That was on June 9th. The 0.382 retracement down around the 16,549 level. I would suspect, though, and right around below that is the bottom of the consolidation. So you'd have to say that right around the 16,500 level should be good support for the Dow. If it breaks below that level, 16,294 is the range that ought to trade, and that's coming off the swing point low from April the 14th. Let's see if we have any kind of conjunction, a meeting up of a couple different Fibonacci levels, and we do. So the larger 0.382 retracement coming off of the lows here from February 5th. They happen to line up with the 0.618 retracement, and that is on April the 14th out there. That is what you call confluence, folks, and that is likely where the Dow will find its support. 16,294, 16,318. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading off 49 points, trading out of 16,727. S&P off 3 at 1932. NASDAQ down 8 at 4302. Russell 2000 down about 76 cents out here, so not moving much. It's trading at 1161. NDX 100 off 8. New York Stock Exchange down 13. Goldilocks trading at 1277. It's up $3. Silver just turned slightly red out there. Light sweet crude is flat, trading at 106.92. Leading the charge, the upside out here, we've got Covidian PLC, a little buyout action up there, so nice 27% premium that those shareholders are seeing this morning. We got Bluebird Biotech, it looks like out here, Bio Inc. That's trading up 53%. Must be some kind of buyout or news behind that. I didn't see what the news was, but that's really up there. Maybe it's a drug trial phase thing. We'll take a look at the stock. You've got Williams Companies, WMB. Not the weapons of mass, not WMD like D like dog, like destruction, but B like boy. Williams Companies, that's up 18% this morning. That's trading up $8.60. Let's go see where that is trading into, see what it is doing. Let's take a look at the daily chart out here. Boy, that looks pretty positive. Let's take a look. Whoa, this is Very positive. Put this on a weekly time frame as well. Let's see what the weekly time frame here shows us. WMB is the ticker symbol, and this thing is at all-time highs out here. Boy, take a look at this is the way you like to see a stock chart. So this is trading at $56. As far as where is it headed to, it's a great question. I don't know that we can really use much in the way of tools. I mean, I can, let me see if this is going to work here. None of the other tools have worked. Let's see if this one will work here this morning. I don't want to shut things down. There's our A, B, C. Okay, at least our A to B equals C. These patterns are working pretty good. It's on its way up to the 57.23 will be the 1 to 2. A to B equals C to the upside. But already this morning, it's done a volume of 4.3 million shares out there. So it's got some really nice volume out here. Maybe this is going to head to even higher ground out here. That is Williams and Company. WMB is the ticker symbol. Nice, strong-looking stock chart out there. United Therapeutics, UTHR, is the ticker symbol. It's trading out at about $95.57. Now, this here has been struggling. It's been testing its unfair low as of late. That's at 89.84. You can see even Friday, it might have closed on it, or just, let's see, the close on Friday was 89.63, so it closed just slightly below that area. Thus far, this is held as pretty good support. If you see it close below the trading session here of March 31st, that will likely set up an A to B equals C to the downside. But what it's really done here, in addition to testing that unfair low area, what it's really done is come back to a breakout area. So this equity here, we're looking at UTHR is the ticker symbol. This thing came back to, it had a nice breakout session, wide price spread, accelerated volume. It did all that on December the 23rd out there. It did volume of 7.4 million shares to the upside. So when it was coming back and it was testing that, it tested it on March 31st with 4 million shares going against 7.5. That was light volume. On Friday out here, 3.5 million shares coming back in that area. So it looks like this really is, to a certain extent, consolidating. Right now, 106.96 is a resistance area. That is UTHR as the ticker symbol. That is the weekly chart that we were looking at. If I switch to the daily chart out here, see if there's any other message here inside of the daily chart. Well, it was that weekly unfair low that really has held this equity. Again, here you can more clearly see the breakout session, even more succinctly, the 4.8 million shares on the daily chart out here. Price came back, and so on a weekly chart, it came back to the breakout area on lighter volume. Certainly on the daily chart, it did the same as well, because when it came back, you're talking 4.8 million shares. It's coming back with 855,000 shares, 1.1 million shares on Friday, 1.6 million shares. So not enough volume to bust it down out here. That is UTHR as the ticker symbol. Let's go take a look here at you've got, let's see here, what else we have percentage-wise. How about Fusion IO? FIO is the ticker symbol. Let's go see what it is doing on a daily chart out here. FIO, that's trading right now at 11.39. This thing has gapped up, a serious gap up out here. Volume so far behind the move is 7.6 million shares. So that is pretty nice. Looks like it's headed towards its swing point. The swing point high on this came in on March 11th. Volume there is 6.5 million shares. So it's moving into a swing point. The low of that swing is $11.76 out there. So it's moving into a swing point. Really suggests that the top of that should be tested. That price is $12.45. That is on Fusion IO, getting having a nice move out here this morning. And, in essence, really breaking its downtrend out here, coming off of its highs back on April the 25th out here. I'll go ahead one more time. I'll try using the line tool here. Let's see if I can. Yeah, I want the arrow. Let's see. Okay, that didn't work real well. We'll try that one more time here. Right there. Hey, how about, well, it sort of worked there. But what we'll see here, what we're going to try to see, is that it certainly has broken through its downtrend out there today. So nice big move. That's in Fusion IO. FIO is the ticker symbol. Right now, the Dow's off 11. S&P is up a point. The NASDAQ is up 3. Russell is flat out here. So just a flat market as we speak at the moment. Let's take a look at some things here. Moving to the downside. To the downside, you've got Pharma Therapeutics. That is off about $3, down about 8% this morning. but that's really not a big deal. This thing had a huge move huge move. This is a daily chart we're looking at. Take a look at wide price spread here. This equity went from a low. This is on Friday's trading session. This thing went from a low out there of 24.40 up to a high of 47.98. That is one big move and big volume in there. So the mere fact that it's pulling back or trading lower here this morning, no big deal. No big deal when it comes to KPTI, and that is Karyopharm Therapeutics out here. We take a look at, let's see, what do we got here percentage-wise? Percentage-wise, the downside, YPF, Sociodad. YPF is the ticker symbol. Let's take a look at it, see what it is doing here this morning. Looks like it's moving down with some volume as well. Volume on this so far, 679,000 shares. The swing point, most recent swing point, only has 2.1 million shares. So considering we've been trading here for 11 minutes, this thing has got some volume busting into that area. It did have a sign of strength out here, so we'll see if this can hold. That's from the trading session of May 7th. May 7th, that volume of 11 million shares, but I'm thinking that today, based on this volume, it's also going to try to take that out. If, in fact, it does that, let's put this on a weekly here real quickly, then we'll come back and take a look at the daily out here. Let's see where the weekly's got any support, if at all, out here. Weekly would say that price ought to pull back into its swing point from February 3rd out there. That's at a price level of about $21. So $26.39 should be its first level of support on its pullback, and if it can break through that, then it ought to move down into about the $21 area, which will be the February 3rd lows out there. That's on ticker symbol YPH. Let's go take a look at some commodities. Let's go see what's going on in the commodity sector out here. Give me a moment. Let's do this. Let's take a look at gold. Let's go see what gold is doing. We'll take a look at it on multiple time frames out here. If we take a look at gold on the 200, on 120, let's put this on 120, not a 30-minute time frame. That's just too short. Let's put it on the 120-minute time frame, see what gold is doing. First, let's start with the daily. On the daily chart out here in gold right now, as we speak today, if this were to finish the session like this, you would have a shooting star candle out here right now at 12.70.70. A little doji style candle that was on Friday that said that it was getting tired. We'll see what kind of today's candle brings to us. Gold here needs to really. Let me switch over. I'm going to pull over a different chart. It'll be a little bit easier for you to see. Give me a moment to get the symbol on here, paint it on, and then pull it over here. So we'll take a look at a couple of different things. Number one, here's the Rhodes Momentum Indicator signals out here. And if we take a look at this black line, this black solid line on the bottom portion of my chart out here, that is the daily for gold out here. What you'll see is that 50-day exponential moving average, 1280.80, significant area of resistance for Goldilocks out there. So you can see here on the daily basis, of course on the weekly basis, you would in essence have a two little shooting star, potentially that is formed. We got a lot of time left in the trading session, so they would say gold would have to finish here and do basically not too much during the rest of the trading session in order for that to occur. So that is significant resistance, both bullish and bearish. You're getting above that level, probably sends up a test to the 200-day exponential moving average, which would take you into the 1311.80 area. That's its 200-day exponential moving average. 1283 is an important area for gold to cross above and close above for this week out here. That would turn the weekly chart, begin to start turning the weekly chart into a bullish-looking chart out there. Otherwise, it's still bearish. What you really want to see in order for this to get bullish is a close above the June 1st high, and that level is 1294.80. 1294.80. Right now, just simply resistance that you've got. No reason to be shorting gold or anything. Just simply natural areas of resistance inside of Goldilocks. You want to watch to see how that area gets handled. If we come over and we take a look at, again, using multiple time frames out here on the daily chart here, Goldilocks is well above its support or its unfair resistance area. That was at 1256, so that is a long way down. However, on the intraday time periods, we'll see a little bit different story. If we look at the 240-minute chart out here, let's pull this back just so you can more visually see this. This has a new market profile box that has formed here during this session, during this 4-hour session. It says that the support ought to find support at 1272.90. If it does not find support there, that suggests a lower price. Lower price where? Good question. I would try the retracement tool on this, but that probably won't work, so I won't do that. Instead, what I'll have to do is this. We'll have to go over and we'll have to take a look at this chart here right now. This happens to be, these are the 120-minute charts here for the NQ and for the ES Mini. So you can see a nice wide-ranging bar that we've had at the market open here after those two hammer candles. Right now it's going to be taking on the swing point, which is the 12 noon time frame here, 37.79. So the NASDAQ looking very strong as we speak. But we were talking about gold, so let me go find the Goldilocks chart out here. Then we can take a look at potential retracements. If we take a look at the retracements here, let's go from a low, most recent low, to the high out here. Let's take a look at those. We go from that low, which is June the 3rd. That's out at 1240.20, up to the high that we've seen here today. Just a normal retracement. Dead cat bounce takes you to 1267. 1257 would be your 0.618 retracement. That could, on volume-wise, if it pulls back on light volume, that could set up an A to B equals CD to the upside. That is on the daily contract for gold. Let's go take a look at silver, see what it is doing. Here is the weekly chart out here. Weekly chart's as good as any as we speak right now. Weekly chart, we take a look at what it has done, what kind of retracement it has done from its high, February 28th, down to the low that was put in here on May the 30th. We'll see, in essence, it's done a dead cat bounce so far, 0.382 retracement. 1997 would be that number. We've seen silver trade up to a high of 1987 out there. So, 10 cents away. It's missed it just by a tad, but really not too bad out there. Light sweet crude, on the other hand, light sweet crude has gone ahead and made the 1 to 1.272 A to B equals CD to the upside. Let's go take a look at its market profiles. Let's go take a look at its levels of support and or resistance out here. Light sweet crude right now, this is going to be a little bit of a delay in order to get the proper market profiles on the system out here. Let's pull this back. Let's take a look at the daily chart. So support on light sweet crude ought to be the old unfair high, which it had taken out a couple trading sessions ago. 103.58 is the number on any pullback. Now, that would be quite a pullback. Not quite a pullback, but you're talking about a good $2 move. A good $2.60 type move out there in light sweet crude. But 103.58 ought to be support. If it breaks through that area, 100.45 would be the next level to be focused on and paying attention to. Let's take a look at the currency market. Let's go see what we have going on out here in currency world. Let's look at the euro US dollar. Let's put that up on my screen. I think that's back here to the left. Give me a moment. We'll put up the euro. So we take a look at the euro US dollar. Last week, closing just slightly, for the weekly chart, closing just slightly back inside the descending price channel out there. Of course, the message there, that descending price channel, that's the one that takes us back into the 2008 time frame out here. That takes us back into July of 2008. And that is a message there that the break topside was a false breakout. Right now, today, what it's doing, it's testing that. Now it's testing to see if it can break back above that area. Now, I wouldn't exactly say it was complete conviction to the downside as far as wide-ranging bar, but if the euro extends its moves lower in the marketplace, its message would be, well, certainly one of at least consolidation. That consolidation pattern really running into about this area right here. Of course, we'll see on any kind of further pullback. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now we've got the really quiet market out here. The Dow is off about 13 points. No big deal there. 16,763, what it's trading at. The S&P is up 2 points. It's trading at 1938. Not a big deal there. NASDAQ Composite up 6 points. Quiet market. The Russell 2000 up 1.5. NDX up 5. New York Stock Exchange up 5 out here. Heck, Goldilocks is up $1 right now. Silver's back 4 pennies. Light sweet crude is up 12 pennies. I would have to say is a quiet market overall. Not a ton of movement inside the paper currency market as well. So we ought to to just take a Monday off and extend this as a extended Father's Day weekend holiday. Maybe get on the golf course out there, and congratulations to Martin Keimer out there. Boy, right out of the gate, he led that thing right from beginning to the end out there, just shellacking all of the other golfers on the golf course out there. In any event, we won't take the day off here. We'll stick with you. We'll find some things that are moving. What do we want to focus on and pay attention here today? Well, first of all, the Bears have control of the New York Stock Exchange. Bears have control of the New York Stock Exchange because the oscillator is below the zero line out there. And I don't have an updated chart. I don't think I updated over the weekend out here. But what I can tell you is that if we were to see 743 or more net advancing issues today, the Bulls would be able to take that back. If we do take a look at the New York Stock Exchange, we're going to see not much in the way of damage here. So the Bears took control, I believe. Maybe it was on the trading session of June 11th out there. That's when we were able to push the price oscillator down below the zero line out there, and they have not been able to do too much damage here as of yet. What do I mean by that? Well, if we just take a look at the last swing point, May 20th, we go from that low to the high out here on June 19th, you're going to see the normal retracement, just a small retracement takes you back to 10,780 on it. You're trading at 10,863. The low so far was on June the 12th, got down to 10,804. Now, could be forming the C point, could be forming the C of a small A to B equals CD to the downside. I will see if that is what is underway. But watch today, net advance an issue more than 743. The Bulls will have taken back control, of the New York Stock Exchange. And without that, it offers the promise of lower price in the near future out here. We also want to be paying attention to what? The VIX index out here. The VIX index, this is the third session in a row here where the VIX is attempting to leap and get over the 50-day exponential moving average. That is priced at right now $12.70. The inter-session high, $12.74. We saw this level get attacked on June the 12th. That was Thursday. We saw that level get attacked again on June 13th. You say what level? The level of the 50-period exponential moving average. The little red squiggly line going across my screen out here. And that is the level that we want to be paying attention to. If, in fact, you see a close today in the VIX, and whatever be so slight, above 1270, that would not be a good message, because that message would be telling you that is where the damage is done in the market. When the 50-day, when the VIX trades above the 50-day exponential moving average, you can call it a fear index, all that type of stuff. You'll see, if you go back and you take a look at it on a chart, you plot on a chart, that's where you'll see damage being done inside the markets here, is when the VIX stays above the 50-day exponential moving average. And the length of time that it stays above that, and of course, depending on the height and that it gets to, that will help. And it works like this, folks. Go back, you can take a look at it year after year after year. It's a great tool out there, and so that's one we want to be paying attention to. 1270 out there right now. It's trading at 1246. So we've got quiet markets, but we know what to look for. And then, of course, we haven't talked about our friend and yours and mine. That is the Euro-Japanese yen out there. I guess we'll just have to save that for the next show. Folks, thanks so much for being here. It is Marvelous Monday, Magnificent Monday. Have a great day. I look forward to seeing you real soon. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.